Not, not when you're working for a big company and they say, you know what, we're going to offer you a 30-day buyout option so you can retire now and get your pension and your 401k and everything else. And then you come into a financial advisor's office and say, well, I wonder if I should take this or not. Why weren't you in the office 5 years before, 10 years before? I used to be at a credit union, and at the credit union, credit unions work with SEG groups, which is special employer groups. And the one I was working with worked primarily with AT&T and Verizon employees, which were primarily unionized type of positions. And the people always came into a credit union to get their advice, and they would come in with their buyout offers. I wonder if I should take this. And they've only got like 30 days to respond. I think it's 30 calendar days, so they at least have time to get some opinions and see what makes sense for them. But like, wouldn't it make far more sense to have worked with somebody working in your best interest all along the way, take advantage of opportunities, structure everything so that you can be well positioned so that when that stuff does show up, you're ready to move if it makes sense for you. Daryl says, a client of mine asked me why their HR department doesn't share this information. HR, God love them, HR is looking to help their employees, the best ones anyway. They're looking to help their employees maximize their employee benefits. And if I was in HR, I would say, look, I'm so glad you're taking advantage of all the voluntary payroll deductions. You're taking advantage of 401k, getting the maximum company match. You're getting all the stuff. I'd be so proud if I was an HR person and someone's taking advantage of everything, because I would feel like your employer is taking care of you, but you were the wise one that took advantage of the opportunities. You're not just looking at your pay check or your checking account to pay for things, using your pay stub, using your paycheck pay stub to help you pay for these things, to help you with your planning. And I would be very proud of those people, but they don't have the same perspectives that we do. And the perspective is the tax train, right? It is almost unmitigated, it's a huge problem. And they don't see the hidden taxes. And I only say hidden because they're just not brought to light. Right. It's not like they can't be found, but no one is explaining things in a certain way so people can understand it. I mean, being able to say you're going to get paid seventh in line. Seventh? I thought when I retire, I get to have all of my stuff tax free. Like, there's that one clip of Grant Cardone. And if you're not familiar with him, he's pretty good on social media. And he is sitting with this guy, and this guy says, you know, when he gets to be 63, he gets to access his 401k tax free. It's like, no, you don't get to access your 401k tax free. I said, no, I get to access it without any penalties. Yeah, penalty free. That's not the same as tax free. There's different things, that different words mean different things. It's so important that first, that we as financial advisors, that we can be very clear in our terminology. Sometimes our own industry terminology is nebulous. I try to be very precise, as I hope you all can tell. I try. And that's why, like sometimes when people say, well, life insurance isn't an investment. Well, yeah, it is. It's just not a security unless it's a variable contract. No one's going to get me in trouble on that because that's factual. But I'm using my terminology very carefully here. Alonzo asked, Dave, do those asset numbers include owned real estate, investment, and or residential? It's whatever's income. Now, here's the thing, is that passive income, what the IRS determines as passive income, like rental properties, that might be factored a little bit differently for the earnings test. That's if you're claiming Social Security before your full retirement age. Otherwise, it's still an income. Might be taxed just a little bit differently. I am not the most well-versed on that, but that's why, I know where to look stuff up. The problem is if I go to look stuff up right now, look, I'm recording, I'm not going to do it right now. I can look it up later. So, well, thank you very much. Appreciate the kind words. Great breakdown. Super, Dave. Thank you. Don't buy me a cape, guys. I don't need that. So here's the thing, though, is that when people go to these workshops, I'm not sure that they're getting the breakdowns that I would be giving them, right? These workshops happen all around. And in fact, I've got some going on. Not me. They're not my workshops. I just know that somebody's doing them on the other end of town here. I've seen the ads on Facebook. I'm like, you know what? Let's just get my own thoughts and ideas out there. Let's bring up these things. How can we maximize our potential here for retirement? And, the question is, how can we set you up in the best situation? If your income is going to be somewhat on the lower side, you probably don't need to make changes in terms of the taxation of your assets. And that's okay. I'm working on a case like that right now. Because as much as I love tax-free, I still want to see it have a meaningful difference.